let's really get into this. Picture this. Just a regular guy, maybe 30-something, living at home with his folks in a, quiet London suburb.
Right. Seems totally normal.
Exactly. But then imagine that guy, basically from his bedroom, setting off this massive chain reaction in the global financial system. We're talking $1 trillion market crash.
Yeah.
In minutes.
It really does sound like fiction, doesn't it? Like something out of a thriller.
It does. But it's real. And that's the story we're diving deep into today. Navinder Singh Sarao, the guy they call the flash crash trader.
And what jumps out right away is just how unexpected he is as the central figure. I mean, this wasn't some Wall Street titan or, a tech billionaire.
Not at all. Working class background, no fancy degree, no powerful connections in the city or anything.
Exactly. And it just throws into sharp relief how one person, maybe in the right place or the wrong place, depending how you look at it, can really shake these huge complex systems.
It's wild. And looking back, you can almost see hints of this intense focus he had. Apparently, before he even touched trading, he was obsessed with the video game FIFA.
Oh, yeah. Like just playing it a lot.
A lot is an understatement. He was ranked in the top 1,000 players globally. Think about that level of, dedication, precision.
Wow. Okay. That takes serious focus.
Right. And you kind of wonder if that same laser focus, that ability to just zone in, was what helped him later in trading. And maybe what led to his downfall, too.
That's a really interesting thought. I mean, mastering a complex system like FIFA, finding patterns, exploiting them super fast, you can see how those skills might transfer, maybe.
Yeah, to the equally rule-based but obviously much higher stakes world of the stock market.
So how does someone like that even, break into trading? You said no formal finance background?
Nope. Apparently, it started with a roommate who was playing around with .com stocks. That got him curious. So he hits the internet, right? Trading forums, reading books, teaching himself the ropes.
Self-taught. Okay. And his early jobs weren't in trading either.
No, pretty standard stuff after call center, even a stint at Bank of America, but not in a trading role. Then he saw an ad for a trading firm, IDT, which later became Futex.
Okay. So that was his way in?
And apparently the interview was something else. He admitted himself he wasn't exactly polished. Showed up in a suit that didn't fit right, apparently.
Huh, okay. Not the typical city look, then.
Not at all. But what got him the job, just sheer raw ambition. He supposedly just told them flat out, I want to be as rich as Warren Buffett.
Wow. That takes some nerve. Or maybe just incredible self-belief.
Right. You gotta admire the boldness, I guess.
Well, it obviously worked. It suggests maybe they saw past the rough edges and recognized some, raw talent or drive. Sometimes those unconventional hires bring something different.
Definitely. And that's where he started focusing. E-mini S&P 500 futures. Now, for anyone listening who isn't deep in finance, what exactly are those?
Right, okay. So E-minis are basically futures contracts tied to the S&P 500 index. That index tracks, 500 of the biggest U.S. companies.
So it's like betting on the direction of a big chunk of the U.S. stock market.
Pretty much, yeah.
Yeah.
But the key thing here, and this is crucial to Nav's story, is leverage.
Leverage.
Yeah.
Always sounds a bit dangerous.
Well, it can be. With E-minis, a relatively small amount of your own money controls a much larger value of the underlying index. The sources say every dollar could act like $50 in the market.
50. Okay, so your potential profits get magnified.
Hugely magnified. But, and this is the big but, so do your potential losses. It's a very high-stakes game. Small market moves can mean big money won or lost very quickly.
And Nav's strategy for playing this game was something called scalping. Explain that.
Scalping is all about speed, making tiny, tiny profits on trades that last maybe just seconds, but doing it thousands of times a day.
Thousands. Wow. You just picture him glued to the screen, noise-canceling headphones on, completely in the zone.
Exactly that kind of intensity. His colleagues apparently nicknamed him the Chav.
Right, which we should probably explain is a UK slang term, sometimes used a bit dismissively about working-class people.
Yeah, it can carry those class connotations, definitely. Shows he was seen as different from the typical trader. But interestingly, they also apparently saw him as a kind of legend.
So a bit of a contradiction there. Dismissive nickname, but respect for his skill.
Precisely. Because despite maybe not fitting the mold, he was incredibly good at what he did. Pulling in tens of thousands of dollars almost every day with this rapid-fire scalping, that earns respect, even if grudgingly sometimes.
What blows my mind, though, is his approach to risk, or lack of it. No stop losses.
Yeah, that's highly unconventional, to put it mildly.
Isn't that like trading 101?
Yeah.
Set stop losses to limit your potential downside.
It's standard practice, absolutely. You define a point where you automatically cut your losses on a trade if it goes against you. He just didn't.
And yet he was consistently making money. How does that even work?
It suggests he had this incredible, almost intuitive feel for those tiny short-term market movements. An amazing ability to just know when to get in and out, maybe. But relying purely on that, especially when the market itself started changing, well, that became a problem.
Which brings us right to that shift.
Yeah.
The rise of the machines, basically.
Yeah.
High-frequency trading algorithms.
Exactly. HFT computer programs designed to trade in fractions of a second, way faster than any human could react.
So for a guy like Nav, relying on his human speed and intuition for scalping, that must have just pulled the rug out from under him.
It completely changed the game. These algorithms could spot and snatch those tiny price differences he relied on before he even had a chance. They were essentially front-running his strategy.
Makes sense. And he actually tried to raise the alarm about some of this stuff, didn't he? Using an online alias.
Yeah, Dacha Fugazi on some trading forums. He apparently tried reporting what he saw as manipulative activity, spoofing to the Chicago Mercantile Exchange, the CME.
But they didn't really do anything.
It seems his complaints didn't gain much traction, no. Which must have been incredibly frustrating, seeing the market change and feeling powerless to stop it.
Yeah, you can imagine. It also points to maybe how hard it is for regulators to keep up when technology moves that fast.
Absolutely. There's often a lag between innovation, its exploitation, and the regulatory response.
So Nev's thinking becomes, if you can't beat him, join him.
Pretty much. He decides he needs his own technological edge. He commissions the development of custom trading software.
A big move. Moving from pure intuition to building his own tools.
It shows he was adaptable, definitely. He saw the way the wind was blowing and decided to fight fire with fire, or, well, algorithms with algorithms, though the way he chose to use it, that's where the legal issues came in.
Right, because this software, manipulator, was built for one main purpose.
Yeah.
Spoofing. Let's be really clear about what spoofing is.
Okay, so spoofing, essentially, is putting in large orders to buy or sell that you don't actually intend to execute.
Fake orders.
Fake orders, exactly. The goal is to create a false impression of supply or demand, to trick other traders, especially those fast algorithms, into thinking the price is about to move in a certain direction.
So you put in a huge fake sell order, everyone panics and starts selling.
And then, crucially, you cancel your fake sell order just before it gets filled. And maybe you quickly buy at the lower price that you just helped create. You profit from the price movement you manipulated.
Deceptive. And importantly, illegal in the U.S.
Very much illegal. It's market manipulation, plain and simple, creating a false signal to benefit yourself.
And the Praetor let him do this really effectively, really precisely.
Apparently so. It was designed for that specific purpose.
Okay, so let's set the scene. May 6th, 2010. What's the mood in the markets?
Jittery. Definitely jittery. There was a lot of nervousness around the Greek debt crisis, broader worries about the European economy. The market was already on edge.
Right, so maybe more vulnerable to shocks.
Potentially, yes. When sentiment is already fragile, it might not take as much to tip things over, a kind of amplifier effect.
And into this tense atmosphere steps Nav, sitting in his bedroom in Hounslow.
And he starts using the Praetor to place enormous sell orders on those E-mini S&P 500 futures.
How big are we talking?
Sources say orders worth nearly $200 million at certain points, huge positions. But the key wasn't just the size, it was the activity.
What do you mean?
He wasn't just placing orders, he was constantly modifying them, canceling them, replacing them. The data showed his orders were modified or canceled something like over 19,000 times that day.
19,000 times. It's just frantic activity.
Insane level of activity. It would have created this massive cloud of noise and uncertainty in the order book. Exactly the kind of confusion spoofers rely on to make other algorithms react.
And then it happened. The flash crash.
Yeah. Suddenly the market just falls off a cliff. The Dow Jones Industrial Average dropped almost 1,000 points.
Which was about 9%.
Yeah.
The biggest single-day point drop ever at that time.
Ever. And it happened incredibly fast. In the space of about 20 minutes, something like $1 trillion in market value just evaporated.
$1 trillion. Gone. Just like that.
Vanished. Trading had to be briefly halted on the New York Stock Exchange. It was absolute chaos. Panic. Nobody quite knew what was happening.
Unbelievable. And Nav, sitting there, having potentially triggered or at least significantly contributed to this, what was his reaction?
Well, financially, he did very well that day. Made almost $900,000.
Wow. Okay, so big celebration, champagne, fast cars.
Nope. 4 milkshakes from McDonald's.
Sorry, 4 milkshakes.
That was apparently his celebration. It's just so understated, isn't it? Almost detached?
Detached is right. It kind of fits with that intense focus maybe, like the money itself wasn't the main driver, more about beating the system.
It certainly suggests his motivations were complex, maybe not the typical pursuit of luxury we associate with high finance.
And his lifestyle after this, even as he kept trading and making millions,
Mm-hmm.
it stayed the same, right?
Totally low-key. He continued living with his parents. Apparently, they had absolutely no idea he'd accumulated over $50 million.
$50 million,
Yeah.
and they didn't know. How do you even hide that?
It's hard to fathom, isn't it? He was still commuting, sometimes apparently on a scooter, no flashy spending, no outward signs of this enormous wealth.
It really paints a picture of someone living a very internal life, maybe quite isolated.
Yeah, driven by the challenge of the market itself, perhaps, rather than what the money could buy. Maybe also aware on some level that his methods weren't exactly conventional
Right.
or legal.
Well, eventually the authorities started looking into the flash crash. The CFTC, the SEC, they started digging.
And those regulators, they have sophisticated tools to analyze trading data. They start seeing these patterns, these huge volumes of orders being placed and canceled from one source.
Then they trace it back.
They trace it back to NavSao Futures Limited, registered at his parents' house in Hounslow.
The suburban bedroom trader.
Exactly. So in 2015, it catches up with him. UK police arrest him based on a US extradition request.
And the charges were serious.
Oh, yeah. 20 counts, including wire fraud, commodities fraud, manipulation. If convicted on everything, he was theoretically facing centuries in prison, up to 380 years, some reports said.
380 years. That's insane. So it looks like the end of the line for him.
It certainly seemed that way. The U.S. authorities clearly saw him as a major player in causing the crash and wanted to make an example.
But then the case took a turn, didn't it? His defense brought up Asperger's syndrome.
That's right. Psychologists assessed him, and their reports described someone who was, yes, intensely focused, brilliant with patterns and numbers, but also socially isolated, obsessive, and perhaps lacking a typical understanding of social cues, and crucially, the real-world impact of his actions. They argued he wasn't acting out of malice.
So the argument was less evil genius manipulator and more someone brilliant, but operating with a different understanding of the world.
That seems to be the gist of it, yeah. And it appears the court found that perspective compelling. It added this whole other layer of complexity to his motivations and culpability.
So what happened in the end? Did he fight all of those charges?
No, he eventually pleaded guilty, but only to 2 charges: wire fraud and spoofing. And importantly, he started cooperating extensively with the investigators.
Cooperating. How?
He basically gave them a masterclass in spoofing, explained his techniques, how the algorithms worked, how market vulnerabilities could be exploited. He was, in effect, teaching the regulators.
Wow. From accused manipulator to instructor.
Quite the turn. And that cooperation likely played a big role in his final sentence.
Which wasn't 380 years, I take it.
Not even close. He received a sentence of 1 year of home detention, no prison time.
1 year at home. Given the scale of the crash and the potential sentence, that's remarkably lenient.
It surprised many people, yes. And the timing was just incredibly ironic. His sentence began right around the time the global COVID lockdown started in 2020.
So the whole world went into lockdown, and he was basically already an expert at being confined at home.
Pretty much. He already had plenty of experience with that kind of isolation, you could say.
So, looking back now, what is his legacy? How is he remembered? Is he the villain who crashed the market, or something else?
Well, that's the complicated part. There are definitely those 2 competing views. Criminal mastermind versus maybe a scapegoat, someone who exploited flaws that were already there.
Yeah, I remember reading, the judge even said something like her initial view of him changed from seeing him as this calculating manipulator to more like a misfit in a broken system.
Exactly, and that phrase broken system is key. It acknowledges that while his actions were illegal, they were also enabled by the way the markets themselves were structured at the time, especially with the rise of HFT.
Right. It wasn't like he ran a Ponzi scheme or directly stole money from people's accounts.
No, it was more subtle. He was manipulating the mechanics of the market itself, exploiting vulnerabilities in the plumbing, if you like.
So he kind of exposed those vulnerabilities in a way.
Unintentionally, perhaps, but yes, his actions shone a very bright, very uncomfortable light on the potential dangers of ultra-fast, algorithm-driven trading and the challenges of policing it.
So he ends up with this really paradoxical legacy, doesn't he? The rogue trader from the suburbs who made a fortune, helped trigger a historic crash, and then sort of accidentally became this whistleblower figure.
Precisely. It's a story that resists easy labels: villain, victim, symptom of the system, maybe a bit of all three. It forces us to look harder at the systems themselves.
Yeah, it really does. So as you think about this whole incredible story of Navinder Singh Sarao, maybe mull this over, what does it really mean when individuals find ways to exploit the cracks in these incredibly complex systems we build? Not just financial markets, but, anywhere.
Good question.
And what does his case tell us about that constant struggle to keep regulation up to speed with innovation? Where is that line between just being clever, maybe pushing boundaries, and outright manipulation that harms the system? It's definitely something to chew on.
If you enjoyed this video and want to dive deeper into more cases like this one, make sure to subscribe to our channel. Don't forget to like the video if you found the story compelling, and share it with your friends and family who might be interested in true crime and mysteries. By subscribing, you'll stay up to date with all our latest content and join a growing community of curious minds exploring the most fascinating cases. Click the notification bell so you never miss an upload. Your support means everything.